What's good, y'all? It's your boy Rick got options. And like I always say, whether the market's up or down, we see green. And we did see a big down day today and a vicious recovery from the bulls. This is setting up to be a bear trap right here at this level, 733.92. We could just say 734 because we had the false breakdown on May 7th. Then we found some support right here May 12th, and then another day of support May 18th. So if the bears cannot push it down below this level right here, the next level they can push it down to is 729, get the gap fill at 725, and then boom, last line of defense for the bulls would be 719.34. All right, either way, SPY will remain bullish above 700. You see all this consolidation right here, this area right here, boom, top to bottom consolidation. We break out, held the top, and then we start running up. That is beautiful. That is bullish movement, textbooks play. Sorry guys. So what you need to look out for is this downside move. If we don't get that, then we're going to keep pushing to the upside above 741.50. 742 gives your confirmation. You can run up to new highs. Remember, we do have NVDA earnings this week that could make or break the market. Also, oil did spike up today, but it did not push the market all the way down. So be on the lookout for that. There's going to be Strait of Hormuz talks daily until there's no more Strait of Hormuz talks. What I'm saying is we are still going to be trading off of headlines. Well, when I say we, I'm talking about retail traders. They call it dumb money. Be careful, because if you trade headlines, you could get burnt with FOMO. You need to chart and play level to level. Have your price target set up and your alert set up, and you should be fine. Looking at triple Qs, we got the same exact setup with tech, but if triple Qs loses this area, it can flush all the way down to 651. Let's take a look at the weekly, how that matches up. All right, you have this evening star doji forming right here, not a shooting star, evening star doji. If this bearish movement gets invalidated, which we still have 4 more days of this week left for this validation to happen, we could break all the way down and find support at 654. If not, we can hold this area, start consolidating, doing something like this, and then take off. All right, this consolidation will form a bull pin, and if we come down in this area right here, we could possibly form a bull flag. So we can come down here for a couple of days, boom, you'll see a setup looking like this inside the wedge with these candles, and then you should start taking off. All right, pay attention to these movements. Have your price target set up for the downside and upside. Under 698, triple Qs will start dropping. So pay attention. If you want to prepare for triple Qs tomorrow, all you have to do is zoom in and key in on this week, but we're talking about tomorrow, so we're going to go to today. We'll take this candle for today, and we're going to go from bottom to top. It's a bearish movement, so we're doing retracements. Retracements means you retrace your steps. That's what stock prices do. Now that we're focusing on previous day's high and previous day's low, we're above the 78% retracement level. We're above the 50% retracement level. We already cleared these areas. It is looking bullish. It's looking bullish after hours because it's pushing up over 707. You get above 709, it can push us to 712. After 712, blue skies. You could also flip your fibs and take your fibs and go from top to bottom to see what happens if we break out from the top. All right, and it looks like this, top to bottom, boom. So we break out at 712.19. Next level where we rejected from 715. After 715, we start retracing all the way back up here. So that's how you set up for the next day when you're looking at stocks. Go from previous day high, previous day low. If you're looking at the weekly, previous week low, previous week high, or previous week high, previous week low. However you set your fibs up, respect the 78, the 618, 66, and 50% retracement level. All right, looking at NVIDIA, we do have previous week high and low set up on our fibs, and we are respecting these levels. NVIDIA can rock it if it gets above 225.40. Okay, it has a little issue right here trying to get above 230. Once it does, it's going to push back up to the highs. We break down from right here and get a bearish curve right here with the 9 EMA sloping down. Then under 219, we could fall to 213. At the 213, pack it up, we're going right to 200, the 50 EMA. Do not guess and see where NVIDIA is going. Do not gamble on NVIDIA earnings Wednesday. This is not financial advice. This is just for educational purposes only. I don't want to see anybody breaking the bank or burning their pockets when it comes to trading. Trade level to level, place the proper trades, and do not, for the love of the trading gods, do not try to trade without a trade plan. That is where you mess up, okay? That is where you mess up, trading without a trade plan. All right, looking at Micron, bearish engulfing candle right here on the daily is not looking good. We rejected my 78% retracement level, came down to the 6 and 8 range, but we did get a nice little bounce. I know this area seems like where we bounce at. Why would we bounce here? Let's just draw up the 6 6 6 1 8 range, right? 6 6 6 1 8 range. You highlight this so you can see where tickers are going to move. You don't want to just put it anywhere on a random candlestick. What you want to do is go to the top of a level to see where it's going to go when it breaks out. So you put it here at the top of the 78% retracement level. You see the next area is 759.10. Did we reject right here? We did. Okay. Then put it at the bottom of a level to see what happens if we break below here. We flushed. All right. So you do that for the 50% retracement level. And we damn near got the bounce right here. That's good enough for me. All right, so if my alert did not go off, I'm not bearish. If I'm looking at the chart and I see it bounce from this area and start going up, then I'm getting calls to the next level to the upside. Pay attention to Micron because it will move at 100-point moves, okay? These candles play no games. The high was 757. The low was 663, okay? That was $94 in one day. It's going to move big like that. So we start to get a flush and breakdown. You can see Micron find a nice little home between 470 and 500. All right, preferably around this 50 EMA. So do not play with Micron because it's going to move big time. All right. Looking at Netflix, bullish engulfing candle. SPY was down today. And when the market is down, for some reason, Netflix likes to run up. I guess everybody puts their money in Netflix or they're just at home twiddling their thumbs because they don't know how to trade when the market's down. So they're going to binge watch some shows. I'm not really mad at it because whether the market's up or down, we see green. I want to make money off every ticker that I analyze. And so right here, we can make a lot of money off of Netflix. If it gets above 90, runs back up to around 95 area, you break out of 95, you could get to this 98 to $100, $110 area because we need to fill this gap up right here, right? And we did have a massive breakdown. But when you zoom out, you see that it was a nice head and shoulders pattern formed on Netflix. And this was charging up all the way since like, shoot, the beginning of the year. So we had this formation set up. We have the neckline right around here. We break out of the neckline at $90 per share. It is good. Where do we bounce from? $85. We hit $85. That was a rejection right here. That was the breakdown right here. That was support, support, and support. Every time we hit the support level, we ran up to where? The $100 area. We break down, run up to the $100 area. Break down, we ran up well above $100 at 130. Okay, we come back down here. That was really, really bad. Nice, bad sell-off, but it came down to where previous breakout in October 2024. So these price targets, these levels don't lie. The support is as strong as it's claiming to be. We get above the neckline right here at 90. You can get those long terms for $100. All right, leaps will help you out when it comes to building up your portfolio. They're very, very cheap. And if you start getting some breakout prices like we did right here, running up from 90 all the way to $108, that's an $18 move from March all the way to April. So a month. $18 move, that's great for your ticker. Okay, checking out SPY before the day is over. You need to understand that it's going to keep moving after hours. We're pushing 740, so you see that we have risen up to 739.60. We get above this high right here, SPY can keep going. Okay, what you want to pay attention to is your upside and your downside levels. If they break out or break down, those are your triggers. Do not guess when you're trading because that's how you get cooked. And if you don't guess when you're trading level to level, then guess what? You're going to make money whether the market's up or down. Peace.